Hey there, I'm Marty Sakata, host of Resilient Alpha. You might know me from the Ivy Family Office Network, almost 3 decades of family offices and big shots collaborating on alternative investments, strategy, and good causes. That's the fuel for this podcast. Why Resilient Alpha? Simple. Why do some funds and managers crush it and others crash? We're cracking that code, redefining alpha, and bringing top brains to unpack asset classes and hot alpha ideas full throttle. Buckle up and enjoy the ride. We're excited to have Cosmo Jiang with us today, a friend of many years. Cosmo is a general partner and portfolio manager at Pantera Capital, one of the world's leading investment firms. He focuses exclusively on digital currencies and blockchain technology. With a background that spans finance, consulting, and technology, Cosmo has been at the forefront of crypto investing since joining Pantera in 2017. As a portfolio manager of Pantera's liquid token fund, he applies a fundamentals driven approach to trading publicly traded tokens, emphasizing product market fit and real world value creation. His thought leadership shines through in Pantera's blockchain letters, where he explores topics like Solana's rise, DePIN, decentralized physical infrastructure networks, and the integration of AI with Web3, signaling his vision for crypto's role in reshaping global infrastructure. Pantera Capital, founded in 2003 by Dan Morehead, was the first U.S. firm to launch a cryptocurrency fund in 2013 when Bitcoin was just $65 and now manages over $5 billion across venture, hedge, and passive strategies. Our group started working with Pantera in that same time frame. Cosmo's work at Pantera reflects the firm's pioneering spirit, from backing over 200 blockchain investments to launching initiatives like Pantera Catalyzed, a research fellowship fostering cutting-edge crypto research. With his finger on the pulse of frontier technologies and a track record of navigating crypto's volatile markets, Cosmo is at the head of his game. The content here is for informational purposes only, should not be taken as legal, business, tax, or investment advice, or be used to evaluate any investment or security, and is not directed at any investors or potential investors in any featured fund or deals on this video.
Great. So I'm Marty Sakata, and this is Resilient Alpha, and we're back for another episode. Today we're with Cosmo Jiang of Pantera Capital. He's a general partner and portfolio manager. Pantera is one of the world's leading investment firms focused exclusively on digital currencies and blockchain technology. We've known Pantera for many years. They came to us in 2014 and started touring with our group. They probably presented 20 to 30 times over the last 10 years and been very successful. Pantera is the one fund that has gone from, I guess, about 1,000x return on investments over a 10-year period. So Cosmo has a background that spans finance, consulting, and technology. He's been at the forefront of crypto investing since joining Pantera in 2017. As a portfolio manager of Pantera's liquid token fund, he applies a fundamentals-driven approach to trading publicly traded tokens, emphasizing product market fit and real-world value creation. His thought leadership shines through in Pantera's blockchain letters, where he's explored topics like Solana's rise, DePIN, which is decentralized physical infrastructure networks, and the integration of AI with Web3, signaling his vision for crypto's role in reshaping global infrastructure. So Pantera Capital was founded in 2003 by Dan Morehead and was the first U.S. firm to launch a cryptocurrency fund in 2013 when Bitcoin was just $65. Dan has a famous email he sent out to his friends saying, Bitcoin is $65, I'm going to buy $35,000 more of it. So Pantera now manages over $5 billion across venture, hedge, and passive strategies. Cosmo's work at Pantera reflects the firm's pioneering spirit, from backing over 200 blockchain investments to launching initiatives like Pantera Catalyzed, a research fellowship fostering cutting-edge crypto research. With his finger on the pulse of frontier technologies and a track record of navigating crypto's volatile markets, Cosmo is uniquely positioned to unpack how trading techniques from traditional hedge funds are transforming crypto, and where blockchain intersects with innovations like AI and decentralized networks. Today, we'll dive into his insights on the future of crypto and its convergence with other transformative technologies. So good to have you here today, Cosmo.
Yeah, thank you so much, Marty. Appreciate the generous intro.
Fantastic, yes. So let's talk about fundamentals-driven crypto investing. So you've emphasized that crypto investing is shifting towards fundamentals-oriented strategies, moving away from the speculative frenzy of meme coins. Can you explain how you apply a fundamentals-driven approach at Pantera's liquid token fund? And what metrics or frameworks do you use to evaluate tokens for product market fit and long-term value? And how does this differ from traditional equity or commodity trading?
Definitely. Great question, Marty. I think if we take a slight step back and think about where crypto is in its evolution, the reality is that there are now many revenue producing protocols that didn't exist in crypto as recently as a few years ago. And so really only starting over the last few years, especially with the rise of decentralized finance in 2021, and really the L1 protocols, layer one protocols becoming a lot more clear on how they create value, that now you actually can apply fundamental investing, whereas before it wasn't quite possible yet. And so what does it mean to apply fundamental value investing? Well, most of my career spanned traditional markets, investing in equities. And the reality is that almost all assets over time will follow the laws of gravity, which is that they need to produce cash flow in order for them to have value. And we're finally getting to a point where we're starting to see that in some of these assets. And so I think crypto will not sit alone on its island. So where are we seeing that today? There's now a number of protocols that are generating meaningful amounts of cash flow. So if you look at the layer one protocols in aggregate, so this is the Ethereums, the Solanas of the world, they're actually generating over $5 billion of free cash flow annualized basis on the first quarter. That's a really large business. If you look at the applications that are built on Ethereum and Solana, they generated over $10 billion free cash flow annualized in the first quarter. So these are now getting to a maturity where there are customers that are paying money to use these services, and actually you can see that tracked on chain. You asked a really good question too, which is how do we actually track this? How does it compare to traditional markets? And in some ways it's more transparent, in some ways it's less transparent. You don't have the same data sources that you did in traditional markets. So I can't go on Bloomberg and download the financials. There aren't traditionally publicized SEC filings, but because everything is on-chain means things are transparent. So you can actually see the revenue that's generated by these protocols second by second, actually printed online on the chain. And so in some ways, it's actually more transparent if you know how to go to the data, filter it out, and really analyze based on a first principles basis how much money these are making. So it's actually, in a lot of ways, a lot of the analysis is becoming more and more similar to what we did in traditional equities and what most of your investors will be used to. It's just taking time to mature to a place where the transparency and auditability is there.
So, what's interesting, and I hate to jump around and make up a question we didn't go over in advance, but I'm going to. So we talk a lot about how blockchain will enable AI, but we haven't talked about how AI enables what you do. So in other words, so you do a lot of analysis, you look at what's on chain, et cetera, et cetera. Does AI make it easier, faster for you to do this analysis than before? Because I'm not sure, how many tokens did you say exist today? Tens of thousands?
Yeah, probably thousands of tokens. Yeah.
So tracking all that, that's a lot of data to track.
Yep.
And I'm wondering, does AI make that job easier? Change it? Is fundamentals easier? Maybe you can talk about that a little bit.
Yeah, absolutely. A huge focus of myself and my team is trying to figure out how we can really apply AI to make us more efficient and make us better at our job. It's just so incumbent upon any investor to really constantly analyze your process. And one of the biggest tools to really evolve your process today is AI. And so one specific area is research. The core of what we do is analyzing protocols, it's reading papers, it's reading research. But to do a first filter on things, it takes a lot of man hours. And maybe the better thing to do is actually throw a bunch of papers into ChatGPT, see where the similarities are to things what you've seen before, see what the differences are, and get a very basic summary of what you're looking for. And then you can make a decision. Hey, we've spent the first, what would have been a full day of a first look at a protocol. Now we can do it in 10 minutes on ChatGPT. And now we can do the deep dive work. That's the next level human intuition that's required to take it to the next step. But cutting out all that initial steps, cutting up a lot of the initial, grunt work, if you will. I think on the technical front, there's so many ways to use data that's available now. And so a lot of our data providers are using AI to give us better sentiment indicators, give us better technical indicators to help us execute a lot more efficiently too.
Yeah, it's a technology used to analyze more technology, which keeps on feeding itself. So it's an interesting loop. So in your January blockchain letter, you wrote about the potential for AI and Web3 to revolutionize data privacy, reasoning, and incentivization in AI systems. So how do you see blockchain enabling the next wave of AI innovation? And what other frontier technologies like decentralized compute or biotech do you think will converge with crypto to create new investment opportunities over the next decade?
Yeah, absolutely. Again, I like to give a lot of context, and before I dive into the question, and the context here is that, fundamentally, we are technology investors. We're trying to look for disruption in the highest areas of growth, and it is so crystal clear to me that over the next decade, the two sectors with the highest amount of disruption and growth are going to be crypto and AI. And no wonder, the White House established a crypto and AI czar, not an AI czar, not a crypto czar, a crypto and AI czar. I think in very much acknowledging that there's a really fruitful synergy between the two. And then from a practical perspective, a lot of the entrepreneurs that study AI and study cryptography, they're the same people. AI and cryptography are both branches of math, and actually they branch out relatively late. And so if you're a PhD student, you actually learn both of these things, you have high familiarity. And so within our entrepreneurs and within our startups, a lot of our founders have AI experience, and a lot of AI founders have crypto experience. And so there's this natural bubbling of juices and idea generation. I think when I think about the areas of where blockchain really helps enable an AI adoption, I think there are a few main areas. One is this idea of open systems. Blockchains exist to coordinate open systems. The basic example of this and incentivize people to contribute to open systems. The basic example of this is you think of open source contributors today. If you're an open source developer, you're doing this sort of out of the goodness of your heart, but you do have to pay for your wife and your kids and jobs. And so you end up going to work for Google, right? And that's so sad because a lot of open source research that otherwise would be open source is trapped in these walled gardens. Well, crypto exists to incentivize the open source people to contribute to large open models. It allows them to verify that they actually did that and they be compensated for their work. So that's very powerful. The second area is this idea of resource coordination. So if you think about, the ingredients that really make AI tick, there's really three raw ingredients that make it tick. It's data, it's compute, it's energy. All these are really interesting areas we're seeing major capacity constraints. In a lot of ways, blockchain can uniquely create new resources to attack each of those. So there are decentralized compute guys that are increasing the amount of data center usage there is. There's data guys that are collecting a lot of data and feeding AI models. There's energy players that are trying to make it easier for homeowners to generate energy and sell it back to the grid. And so in all those areas are super cool. And maybe the last one I'd leave you with of the three big areas is this idea of identity. In a future, a world where there is going to be infinite AI generated content, infinite AI agents, the reality is I'm pretty happy to use an AI bot for a lot of my services, right? They're fast, they're efficient, they get the job done. But in certain use cases, knowing that I'm talking to a human will be vitally important. Whether that's I'm a younger guy trying to date, whether that's I'm trying to message someone, whether that's a government trying to provide certain human basic health services. You want to know that this is a real human you're talking to. And crazy, it's getting harder, right? It's getting really hard. And so what better way to create this decentralized, censorship resistant, fully encrypted identity layer than crypto? And it's funny because the OpenAI founder, Sam Altman, who we've had the fortune of meeting with a couple of times, is actually created this protocol called WorldCoin directly because he believes that OpenAI is going to create a lot of problems with AI-generated content. Why not? And so he wants to create an identity layer called WorldCoin in order to address that problem.
Right. I mean, it's interesting. So unfortunately, I've been deep in the weeds of crypto for a long time. And I guess some of the issues are with origination of ideas, copyrights, things along those lines, intellectual property that the AI borrows heavily from. So that's one issue. And maybe crypto plays a role in tracking that. And then I think probably 7 or 8 years ago in San Francisco, we had a law firm and another crypto entrepreneur present on how crypto was a great way to track all personal information, all the way down to genetic information, where it's like, okay, what is you, and people should be paying you for anything they use of yours. Mm-hmm. Any thoughts on that?
Yeah, I think there's two powerful things there that you allude to that I want to point out. One is this idea of ownership of your own data. So if you go back to why the ethos of why crypto exists, it's really about empowering the people that are providing providing the data. In our current existing world or current existing internet paradigm, the large tech platforms like your Facebook, like your Google, they own a lot of your data. Yes, you use their service, but the reality is because you're using their service, your data sits on their servers. They can do what they want with it. And you as a user have no power to get monetized for to monetize that. Crypto exists because it's really about giving power back to the user. About, in the case of this open source contribution, there's a company called BitTensor that we're invested in. Basically, if you're an open source contributor and you contribute to this protocol, it's very verifiable that you did, and you get paid in BitTensor tokens. So you are now getting paid for your contribution to this service. Or WorldCoin, in their example, you upload your identity to WorldCoin. No one can access it, but you can opt in to allow people to use your identity, and in return, you get paid for that. And so it's all about remonetizing and sharing the value with the people who actually deserve it. I think the second thing you said, which is maybe a bear case in crypto historically, has been this idea that crypto seems very scary because it's like highly transparent in some ways. Because everything's printed on a blockchain, it's actually all searchable. And so like there's a sense that, if you want to do something anonymous, which you could do for many good reasons, it's not possible. Well, there's a lot of actually incoming innovation around zero knowledge proofs, such that there are now privacy preserving blockchains that are, perhaps so that you can actually transact in a fully transparent way, in that people can check your work, but they don't have to know who you are. Yep. And so that's really powerful.
Interesting. So you've highlighted DePIN projects like Render Network and Arweave as exciting because they build real world infrastructure using blockchain. Why is DePIN such a compelling investment thesis for you? And how do you see these decentralized physical infrastructure networks reshaping industries like computing, storage, or even energy in the coming years?
Totally. I think DePIN is one of the most exciting sectors because it really showcases how crypto is being used in a very elegant way to incentivize new behavior and do things in a cheaper, faster way than legacy incumbents. So that's a lot of gobbledygook. So let me try to walk through a couple examples. One is this company called HiveMapper. HiveMapper is effectively competing with Google Street View. What they do is, instead of, how Google Street View sends around a car, they map your road once or twice a year. And, it costs a lot for Google to have this vehicle, costs a lot for Google to hire this employee. HiveMapper's thought was, what if instead of doing that ourselves, what if instead the everyday drivers that are already out there, the UPS drivers, the Uber drivers, what if they map the world? Imagine how much fresher that map could be, how much faster we can map the world, and how much cheaper we could, because for them, they're already doing it. They don't need to do anything else, and we don't need to buy a car or anything like that. Lo and behold, HiveMapper's now mapped 35% of the world's unique kilometers. 35% of the world, not just the US. And
how do they make money though?
Yeah, and now they're starting to sell that data, which is what's so exciting. A lot of mapping companies have now raised their hand and said, wow, this actually is better mapping data than we're getting from Google. And there's this whole movement of de-Googling that's going on in big tech. And so just last week, HiveMapper announced that Lyft, the large ride-sharing company, is now using HiveMapper data to power their maps. That's pretty crazy to think that a mega cap tech company is now paying a crypto protocol for its service.
And the protocol works. I mean, are there many employees of this
HiveMapper? Yeah, it's pretty great because crypto is sort of like software. Crypto is effectively software, so these businesses can scale very, very fast. And because a lot of the labor is actually gig economy work, you don't have to hire a lot of people. A lot of people opt in, and so the HiveMapper core team is only a few dozen people, but there are tens of thousands of drivers worldwide that contribute data to the network and really leverage that team's ability to.
Yeah, it's interesting because we had Matt Rabinowitz on about a year or two ago. And he has a company called Nature Eye, which was flying drones over, these world preservation sites because COVID originally hit, right? And then what he found was that so he's able to geofence the drones. You can go like an African safari, and instead of paying $9,000, you're paying $90 to fly a drone over and fly up close. It's got these zoom-in cameras where it can be hundreds of feet away from a giraffe, but zoom in like right stared in the eye or something like that. But what Matt found was that he could license the technology to have other people using drones map out the same experiences for him. So it sounds like what your app is doing is doing something similar for what he's doing.
That's right. It's all about using token incentives to coordinate a bunch of people that would otherwise have no reason to work together to create this wonderful new service.
And there's many opportunities. Like, I mean, you could build out those services in New York City or San Francisco.
That's right.
Day and night, it seems like, right?
That's right. Yeah, I mean, there are hundreds of Hive Mapper drivers out on the street right now.
Really?
In New York. Yeah.
Interesting. Yeah. So, so let's talk about Solana. And I mean, I got to kick myself because I got approached by one of the companies that was a big investor in Solana back in the day to help them raise capital. And I was like, it was probably 2016 or 2017, like when the market really hit a dearth, and then like they are like one of the first investors in Solana. So you've been vocal about Solana's growth, noting its surge in active addresses and trading volumes surpassing Ethereum in some metrics. And then a lot of us were pretty positive on Ethereum, and then we thought Solana outperformed it. So what makes Solana a standout in layer one space? How do you see the competition between layer one blockchains evolving as they integrate with frontier technologies like AI agents or tokenized real world assets?
Yeah. Let me backtrack a little bit to like why Solana got to where it was. So if we think about blockchains, blockchain technology has actually existed for decades. It's not something new, but Bitcoin was really the first public blockchain to really take off. And it did something really elegant and simple, which was transfer value back and forth. That's all Bitcoin did. It did it well. Very soon thereafter, people thought, hey, we really love that Bitcoin thing. Well, what if we tried to do more than just that? What if we tried to have more complex smart programs built on the chain? And indeed, thus was Ethereum was born. And Ethereum was great. People loved it. You saw the explosion of decentralized finance and other applications. But at some point, because of all the activity, Ethereum got kind of slow and congested. And so very naturally, the reaction was, hey, we really love that Ethereum thing. But what if we did it faster and cheaper? And thus was born Solana. And so why Solana is really succeeding today goes back to, I harken back to a lot of lessons I've learned in traditional finance. And one of the quotes that I always go back to is Jeff Bezos always said, what are the three things that customers really care about? It's faster, cheaper, more convenient. And that's Solana. It's faster, cheaper, more convenient. It's very simple. And so over the last few years, as a result, they've taken most of the incremental new developer growth, nearly all of the incremental user growth and incremental transaction growth. And so they're really doing quite well.
Fantastic. So we were just talking about Solana and how I totally missed the multi-coin boat. Damn it. But so let's talk about the political environment. Paul, we have a different regime, and I think there's a lot of Trump coins out there right now. At least a Trump meme coin that did pretty well. Can you talk a little bit about how the outlook for crypto has shifted with this new administration?
Yeah, absolutely. I think it's really important to emphasize that it's been a total sea change in how digital assets and the blockchain industry is viewed in Washington, and that's really important. To give you a sense of what it felt like for the last couple of years, our job as startups, as venture capitalists, is to talk to a lot of startups and entrepreneurs. And a new question that came up the last 2 years that we had never gotten before was, hey, I'm really passionate about building this protocol. I want to build it on blockchain because I think it can create a lot of value, but I'm worried, do I have to move outside the US? And I've had personal friends who moved their wife and kid to Singapore from the US because they wanted to start a blockchain protocol. That's crazy. And that stops now. Like, the reality is that being anti-crypto doesn't help anyone, right? Crypto is just a type of technology. It'll have some good things. It might have some bad things. And we should just help foster it in a nice regulatory environment. And so we're very excited to see now that really the tenor of conversation has totally changed. Everyone in Washington is now pretty pro-crypto, whether you're Democrat or Republican. I think that's really important to emphasize, because a lot of people ask me, hey, President Trump got elected, and that he's obviously very pro-crypto, but what about everyone else? And what about what happens after 4 years? And to that I say, wow, I've spent more time thinking about politics and how legislation gets made this year than I have in my career, because it's so important for us. And as I have and dug in, it's pretty clear that there's both a bipartisan and bicameral push for real legislation and legitimizing of the industry, which is really nice to see. In fact, we're sort of on track for two major pieces of legislation: the stablecoin bill and a market structure legislation bill, to be passed by mid-August, which is lightning speed on Congress on congressional terms.
What is the stablecoin bill?
The stablecoin bill will classify certain stablecoins as legally issued and be able to be traded and used by domestic banks in the U.S., which is really a big deal because stablecoins have been so powerful for the U.S. economy and for enabling crypto. To give a sense, stablecoins right now are about $230 billion of capital. That makes them the 12th largest holder of U.S. treasuries in the world. So it's actually a very large driver of buyer of U.S. treasuries. And more than $100 billion of that is held outside the U.S. So stablecoins have been hugely positive for helping the US dollar actually gain growth over time. And our politicians recognize how helpful crypto actually has been for the US. And so now they're really advancing.
Wow. Well, that's fascinating. I mean, and I think that somebody told me that there's about 50% ownership of stable coins, and I think you're probably above that, right? So that's great. So can we talk about institutional investors in crypto? I mean, obviously there's been a big change. We've got strategy, and actually somebody approached me the other day and said, we're going to be doing institutional investing from corporates in Brazil, because Brazil has lenient laws towards that. So can you talk about institutional investors, how they're going to drive crypto's maturation, bringing more fundamentals-based investing? You know, how are institutions reshaping the crypto landscape from ETFs through tokenization, direct investments? You know, what barriers do you see to that that are still out there? And what do you need to, you know, for crypto to overcome to become more mainstream?
Yeah, I think there have definitely been three major things to call out that's causing this institutional shift into crypto now. First is really the maturation in the industry. I think if we were having this conversation 3 or 4 years ago, there weren't that many applications that really made a difference yet, and adoption wasn't that high yet. So institutions would look and say, it's not quite ready. But now there is a lot of adoption. We just talked about stablecoins being everywhere. It's really powerful. I think the second point is really BlackRock entering the space with an ETF. I think that really put blockchain on the map and made institutional investors wake up and say, wait a minute, maybe we should be paying attention. Maybe there really is something there. In fact, last year, the Bitcoin ETFs were by far the most successful ETF launch in history. Bitcoin ETFs brought in over $30 billion of net inflows last year. That's more than the QQQ or the NASDAQ ETFs brought in. Think about that. That's crazy. Bitcoin brought in more capital than the QQQ, which is the second most tracked index in the US. So clearly there's a lot of demand. I think the third thing is really this political shift in this regulatory picture. The number one reason why institutions didn't want to invest in blockchain before was they were afraid of lack of regulatory clarity. Well, we're going to get it later this year with legislation, and that's such a big unlock. Whereas last year, if you were a large allocator sitting in investment committee, you might have been afraid or thought you might have some career risk to bring up blockchain. This year, it's actually going against your fiduciary duty to not bring it up.
So, well, I mean, it's very interesting because for years we asked family offices, well, what's your, Bitcoin strategy? And as you probably know, most of the CIOs of family offices come from public equities. They're not people who came from innovation and I would say 80% said we have no worldview on it because we don't look at it because we just do public equities, et cetera. And not a lot of them are kicking themselves. And then the family offices that, took the other path did extremely well. And so they have something to talk about on the golf course. So I was hoping that we could, let me just go back through this list here, talk a little bit more about the impact of Bitcoin becoming more of a treasury asset and what the impact of will be on volatility, right? So again, if strategy has it and other companies have it in their treasury and there's all these ETFs, the people who look over the markets don't want to see downside volatility. So maybe you can talk towards that a little bit.
Yeah, absolutely. I think one aspect of any asset class as it matures is volatility decreases over time, as more steady hands hold it, if you will, as more long-term investors hold it. And so we do see that now with Bitcoin. Bitcoin volatility has dropped from prior cycles would average 60 or 70. Bitcoin volatility is sitting at 40 or 50 now, which is a huge, huge difference. And I do attribute a lot of that to the fact that the ETFs tend to be a lot of retirement investors and institutional investors who are truly holding it for the long term and not just trading it. And additionally, you're seeing a lot of sovereign wealth funds and governments really step in to buy Bitcoin in major size, including guys like the United Arab Emirates and Saudi really buying Bitcoin. And so all these steady hands that are much below our long-term focus are serving to reduce the volatility of Bitcoin, which frankly makes Bitcoin more investable for more people, right? As volatility decreases, more people are able to fit it into their risk allocation framework. And that only serves to create a positive flywheel and increase Bitcoin adoption.
And I assume it'll get into the treasuries of a lot of sovereign wealth funds outside just corporates.
That's right. We're already seeing that. The countries are few and far between today, but we do know that the Swedish sovereign wealth fund owns it, UAE owns it, Saudi Arabia owns it, Bhutan, El Salvador. So there are a lot of countries, and most specifically, the U.S. Bitcoin Strategic Reserve was adopted this year. So the U.S. owns it.
And if they had thought of that before they sold all their Bitcoin to Tim Draper, they'd be doing pretty good.
That'd be nice.
Yes. So we have a lightning round coming up. We're going to take like a 2-minute break and get back to that.
Sure.
So we're back for the lightning round. And so let's talk about the biggest crypto trend for this year. What do you see that as being for this year until the end of the year or after?
Yeah, definitely the biggest trend this year is about the adoption of stablecoins. You're now seeing large companies like Stripe start to adopt stablecoins for all their multinational transfers or get their SMBs to. SpaceX has adopted stablecoins to manage their multinational treasury, and users continue to use stablecoins in large amount. And so stablecoins definitely, I think, today they're 250 billion in market cap. I think it goes to trillion by the end of this year, and maybe 10 trillion over the next few years.
Wow. What's one DePIN project you're particularly excited about?
Yeah, we talked about HiveMapper earlier, but to give a different one, there's this company called GeoNet. GeoNet provides also location-based services. What is very exciting is their use for automated machinery and farmers. And so, they're actually tackling a very large space, but with very large incumbents. But very excitingly, the U.S. Department of Agriculture started a program with GeoNet last year, where the USDA now subsidizes GeoNet devices for U.S. farmers. So the U.S. government is now paying a crypto protocol because it's delivering a better service.
Sounds great. In one sentence, why might Solana overtake Ethereum in the next 5 years?
I think better, faster, cheaper, more convenient.
What's one killer application for AI and crypto integration?
I think the one that really stands out is the idea of identity. The idea that we really like our investment in WorldCoin, which is the Sam Altman-backed crypto protocol. It's really trying to create this identity solution so that you and I can tell if we're interacting with a human in the digital world, which is so critical for use cases such as dating. Imagine that you don't want to be catfished, such as for gaming, you want to know that you're playing against someone on fair terms, they're not augmented by a bot. Or for government services, it's just, if I'm a government, I want to know if I'm sending something digitally to someone, it's going to the right person and not a bot.
Yeah, absolutely. So would you ever invest in a meme coin by the name of Trump? No. Or are they too speculative?
Yeah. So for us, we're fundamental value investors. What we really care about is finding things that are going to be business that grow over long term. Meme coins are like, I think of them as gambling, and that's totally fine. I have nothing morally against gambling. It's a huge industry that's been around for millennia, ever since humans were rolling animal knuckle bones. And it's going to be a large industry that I think crypto will play a part of. That said, I don't need to be the guy sitting at the craps table, but I can be the guy that owns the crap table, the guy that owns the casino. And so we're investing in a lot of protocols that enable people to gamble, but we're not the ones doing the gambling.
We covered this earlier, but maybe you can be more succinct. What's the biggest regulatory obstacle for crypto today?
Biggest regulatory obstacle is this idea that tokens don't have a regulatory framework. The crypto industry has been asking for clear legislation for how we should treat our tokens, whether they're a security or commodity or something in between. I think we get that this year, but that has been the biggest hindrance.
So let's talk about the end game of crypto. In 10 years, what will crypto's role be in the global economy?
I think in 10 years from now, a lot of people will realize that crypto actually sits behind a lot of the applications we use, and we won't realize it. In the future, you and I won't care if we're using Solana or we're using Ethereum or whatever. All we'll know is that we have a financial application. It works well. It does what we need it to do. And the reality, though, on the back end, it's all run on crypto rails. I fully expect all financial transactions, all your financial mobile apps on your phone today to be on crypto rails 5 years from now.
Fantastic. Great. Well, Cosmo, listen, thanks so much for being so informative, and thank you so much for making it today.
Thanks for having me again, Marty.
Cheers.